Will my fund be set up just like a Wall Street fund? Not exactly. First, let me explain that there are different kinds of funds and there are different ways of going about this. Most of the funds have a general similar structure. Real estate funds are structured a little bit different than some other kinds of funds, but more or less, there's kind of a structure that everybody agrees on. That being said, every single attorney writes these documents their own way. They have their own creative style. There are things they think are more important than others. There's not like a form template book that I've ever seen that attorneys just pull this out of. So a lot of it evolves throughout their practice, and they just develop the way that they like to do this over time. That being said, there are a few important things for you to understand. Number one, Wall Street funds are generally in business for selling stocks and bonds or shorting different kinds of financial instruments. Financial instruments are overseen by the government in a different way, by FINRA, which is the self-regulatory body of all the broker-dealer type firms. So there are some different rules that apply to those people that apply to us. Real estate has evolved in a whole different way because we generally are not subject to a lot of the rules and regulation that the stock funds are subject to. So a lot of our things are set up a little bit differently. The most important difference is that we don't deal with, most of ours, let's put it like this, most of ours are set up to be private. Sometimes the hedge funds are private, sometimes they're public, so it depends on that situation. Ours are almost always going to be private. Another important consideration is the nature of the asset. When you have mostly stocks in your security, in your portfolio, like the Wall Street hedge funds do, it requires a different kind of oversight. At a certain level, they have to register, so they don't get the exemption the same way that we do. Real estate is just a different asset class, and all the way around is treated in a different way. The structure, though, is mostly the same. I will tell you the biggest place that there is a really significant difference. The way that the hedge funds on Wall Street make their money is not really dependent on them performing at a high level. You would think that they're taking a big piece of the back end and the profit and all the things that they generate. That is not entirely true. They are very focused on taking their asset management fee. So whatever amount of assets they have under management, let's say there's $1 billion, they'll take 1% of that, or sometimes even 2%. And on January 1st, they've got $10 or $20 million in the bank to take care of their overhead for the full year. Now, as you can imagine, the pension funds and a lot of the institutional organizations that invest in these deals are not all that happy with this. And a lot of them in the last couple of years have been really pushing back hard. That's part of the reason why I really don't encourage real estate syndicators to follow the same model. There are some real estate syndicators or fund managers in the real estate world that want to use an asset management fee. And I like to build in an asset management fee just in case there are lots and lots of profits and it would be relevant to take that fee. But if the margin is in the normal range, I would say that taking those kinds of fees is probably not the right thing to do. Instead, what real estate people get are all the fee for services. So for example, we can be the real estate broker, we can be the vendor of choice as the property manager, the mortgage provider, the repairs and maintenance organization. So in addition to the profit sharing and different things that we take, we also receive fees as vendors. So that's a significant difference between what we do and what Wall Street does. At the end of the day, though, they're private securities. They're all designed to allow wealthier people to get into private investments that are not regulated, more or less. They're more or less not regulated. Ours are largely not regulated. But the stock market ones are a little bit different just because they have some different rules around owning market baskets of securities. And real estate is not considered a security in the same way. The private placement that we sell shares of stock in the LLC, those are securities. The LLC stock is securities, but the underlying real estate is not, so it doesn't trigger the same rules. Anyway, listen, this is a great business. Just go out, do things right, and stake your claim.